Hello everyone, this is Soundarya V, currently studying MBA at Sri Venkateshwara College of Engineering, Bangalore. Today I am going to present the topic called Accounting Cycle. First of all, meaning of accounting. Accounting is an art of identifying, recording, classifying, summarizing the transactions which are of financial nature, then analyzing, interpreting, and communicating the result thereof. It is also called as language of business. Meaning of accounting cycle. It is a sequence of accounting procedure which is used to record, classify, and summarize the business transaction. Accounting cycle. There are 9 steps in accounting cycle, that is analyzing, journalizing, posting, summarizing, adjusting, correcting, organizing, closing, finalizing. Analyzing. This is the first step, involves determining the title and nature of account, that the transaction must be properly analyzed so that it can be correctly recorded in the journal. Journalize. This is the book. This book is also called as book of original entry. In journal, the transactions are entered in a chronological order and is prepared on the concept of double entry system of accounting, where every transaction affects at least two accounts, a debit to one account and a corresponding credit to another account. Posting. Posting is the process of forwarding journal entries from journal book to ledger book, commonly known as general ledger. After journalizing, the accounting transactions are posted to their relevant ledger account. This step classifies and groups all entries relating to a particular account at one place. Summarizing. After posting the ledger, this step summarizes all the entries recorded by the business during period, which is generally the financial year of the entity. It is done by preparing an unadjusted trial balance, a list of all the account titles along with their debit or credit balances. The main purpose of drafting an unadjusted trial balance is to check the mathematical accuracy of debit and credit entries recorded under previous step. Adjusting. After preparing unadjusted trial balance, the next step is to pass journal entries pertaining to certain adjustments like recording of closing stock, prepaid expenses, accrued income, etc. These entries ensure that the entity has recognized its revenues and expenses in accordance with accrual concept of accounting. Correcting. After adjusting entries have been passed and posted to respective ledger account, the unadjusted trial balance need to be corrected to show the impact of this adjustment. For this purpose, an amended trial balance known as adjusted trial balance is prepared. Organizing. Organizing the various accounts by preparing two important financial statements, namely income statement and balance sheet. The income statement lists all expenses incurred as well as revenues collected by the entity during its financial period. These expenses and revenues are compared to relieve the net income earned or net loss sustained by the entity during the period. Closing. After preparing the income statement and balance sheet, all temporary and nominal accounts used during the financial period are closed. This is done by means of specific journal entries known as closing entry. The closing step impacts only temporary accounts, which include revenue, expenses, and dividend accounts. Journal finalizing. The last step is to prepare a trial balance which shows how the balances of various accounts have been affected by the entries recorded throughout the period. This final trial balance is generally referred to as post-closing trial balance. Its format is similar to that of unadjusted or adjusted trial balance. However, it lists only permanent account because of all temporary accounts get closed. Why do business use accounting cycle? Business uses accounting cycle for recording and preparing accurate financial statement. Accounting cycle helps the business owners in closing their books for an accounting period. This helps with information required for performing financial statement analysis and managing the business. Role of technology in the accounting cycle. Use of accounting software. Accounting cycle has functional modules that can be used to record and manage accounting activities including accounts payable, receivable. Software like QuickBooks Sage can automate the process of recording transactions, posting debits and credits. This can reduce the time required for these tasks and reduce errors. Automation of accounting processes. It is the use of technology to replace manual, repetitive accounting procedures. Automation can improve accounting data accuracy, reduce the likelihood of errors, and offers accountants more time to work on other crucial tasks. Conclusion. As technology is advancing, accounting software are replacing the traditional method. This has made because the process is much easier and it is more accurate and it consumes less time. However, it is important to understand the process on the fundamental level to accurately complete the accounting cycle. Through the help of accounting cycle, businesses can measure the effectiveness of a financial strategy that has been implemented in the past. The accounting cycle helps in the generation of accurate financial statement when the cycle is followed till end. This ensures that the data is organized and accurate. Thank you. Please like, share and subscribe.